Hi, Warriors. Hi, team.
Good morning,
K-Man.
Coach.
Hey, Blake, how are you? I see K-Man's here, AJ, Hugo. Some people, want to pay attention on the full day today. Anyway, guys, you know what I've been thinking about today? It's gonna be a blue, blue Christmas without you. I'll be so blue just thinking about you. You'll be doing all right with your Christmas of white, but I'll have a blue, 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 blue Christmas. Merry Christmas, Warriors.
Merry Christmas,
Merry
everybody.
Christmas. That was
Hey,
awesome.
Merry Christmas,
Merry
team,
Christmas.
and Ryan's here. Okay, so with one day left to go, you know, these kind of markets, I wanted to ask Ryan how he felt about. Yeah, I'm looking at the euro here, and I'm going to share a new formation that most people probably have never heard of. It's not in Edwards and McGee. You're not going to find it anywhere but here in Face. Okay, it's euro, and this is a doggy bottom. Here's the back of the dog, front of the dog. Here's the head of the dog, and here's the snout. Okay, um, Ryan, I'm taking a small shot and buying the schnauzer right here, all right, with stops under his poo-poo down here. What do you
Good.
think?
Looks
Huh?
like a good trade, mate. Looks like a good trade. You'll be joining
Huh?
me.
And,
You'll be joining.
I was thinking about writing a book about the doggy bottoms. I think it'd be a big seller. But Blake, you have any view on the pup?
Just hopefully it doesn't take a poop on the sidewalk.
Well, no, the poop is back here.
Oh,
It's on the channel line. It's
Oh,
well,
that's good.
I don't know if I know you've had dogs, Blake, but poop comes out of the back of the dog, not the front. Okay. Anyway, this is
I'm, I'm
my.
already. I'm already
Huh?
long this from the. I'm already long this from the feet. So my
Oh,
poo loss.
you bought it on the paw.
I put it on the paw, and my poo loss is just under the paw.
All right. Well, that's what I see today. Um, how about that reversal in S&Ps on Friday? How about this? So is the character of the market changed? Look at these ranges now. So I'm conflicted now. I could see new highs or I could see it failing. I don't know which to do. I'm just glad, at least today, I'm glad I covered where the market was still lower. I covered all my puts. I'm flat. But just one thing I want to show. The reason you guys know probably why I got flat on Nvidia. It wasn't making new lows with the rest of the market. This was Monday. Here's a lesson. Here's Monday's low. Okay, we bounced. Then we had then it when the market started to come off a little, it retested. But when the market was this was when the market got creamed. So it just kept holding. That CL's a 3. So I don't know. Maybe I should be putting them back on now. Maybe we're going to new highs. But a couple stocks that did not perform and come back to keep an eye on is Meta did not come back. Meta's negated a breakdown. Meta, even if the S&P's below, I don't think would make a new high. So it was Meta and Microsoft never really made a new high like the rest of the board. So Microsoft is a candidate too. But look, someone's washing their car.
Yeah, who has this
Ryan,
background noise?
Ryan, you're a little loud, buddy.
Uh, oh, anyway, so there, see, Microsoft, Microsoft never made a new high. Anyway, um, so what do you think, Ryan? What on your long euro? So, do you think this was The top, we could be getting the top here, or just looking for a little correction.
Time will tell. I'm still bearish the euro. I just bought it because we held that prior November low.
Yeah.
I thought that was enough. If we can't get through that on the back of the Fed and everything else, then I'm going to give it a go. I'm still bearish the euro for next year.
Yeah.
So I'm not going to be.
But it could try 105. It could try 106 again and be some type of flat or something, and then abort again. Right?
I mean, it's doing exactly what you'd think it doing. It hit 104.50. That was my level above 104, and we can't get through there. So that keeps the bearish pressure and this break going from that big candle. Of course, it could bounce to 106, but even 106 is the big area, but it's still a short-term area. Nothing changes until we get to 108, 109, something like that. So be prepared.
Maybe the dollar weakens for a while and yields come off for a while, even though today they're up, and maybe in the yen we're not going straight to new highs. Maybe we get an ABC, and that would be exactly the same kind of scenario in the dollar. And the dollar already has a little wick, and I think it's because of the euro is starting to come back.
Well, we've got the year-end stuff. We got the year-end stuff to deal with now, haven't we? So you can't take anything for granted in these last few days of the year from what's going on. Dollar yen, we were saying it all last week through the Fed, through the BOJ. It's going to go higher, just purely on what the Bank of Japan doing and what the Fed have done. So I see no reasons why that doesn't stop. Yields has been the big one. That break of 450, that's the one that's looking really strong amongst a lot. That could also have an influence, obviously, in the dollar. But
yields look exactly like still kind of like this, right? I mean, pretty similar. So I remember last week I said too much mo for this to be a high. Let's see where if the yen can make a new high. I think it'll be over 70 this time. But if the dollar attempted a new high, it's got a weaker RSI structure. It may not get over 70. So lots of things to look for after the holidays. I have a hard time wanting to be positioned during the holidays. Next couple of weeks. It's hard to trust things. I'd mainly day trade them, maybe overnight, but I'm not looking to start a campaign on anything until New Year's.
I'm more interested in what films I'm going to be watching and what charts I'm going to be watching.
Yeah. Okay. All right. How are you doing today, Kay?
I'm doing fine, Dale. Thank you. Hope you too. Hope you're ready for Christmas and the year-end festivities.
I am the year-end festivities.
Okay.
I mean, invite me to a party and I'll clear the room in about 5 minutes. Anyway, what are you thinking? What are you thinking, buddy?
Really not a lot. It's already been said many times. It's probably going to be all about who needs to do what for year end, but it's clear. And then as Ryan also said, we've spoken about that. I mean, dollar yen. I mean, if you see a bit of retracement for as long as those yields elsewhere are holding up, it's probably going to be bought. And it's not only dollar yen, I mean, even those yen crosses are holding up pretty well. And I guess that's about what there is to say. It looks like a very strange year for what the people always talk about these seasonals and stuff, because the equity markets are not doing anything seasonal right now. They are in a bit of a yo-yo, trying to correct, or shall I say, panic a bit on the back of the Fed. But do they need to panic? I don't know. The dollar is still doing quite well. It looks like to me. it's a case of not fighting too much. Whatever flows they may throw at the market, just follow the moves, follow the leaders. The two that are starting to hold up okay, I'm going to say, were gold under 26 bucks. It was 2600. It looked a bit cold down there, and silver as well. I mean, we had a bit of a visit in the 28s, but we are back in that zone, that pretty important zone, I think. 2960s up to 3010, 3015, and we could just hang around here until the end of the year, unless, and we have seen that in the past, unless we have year-end flows to do in metals as well.
Yeah, they did turn the gold-silver ratio.
That's
Yeah,
one for next year. If you
yeah.
really, if you think that okay, it's going to be a year in several legs again, but if you think that in the end things are not going to be all right, I would suspect that particular ratio to go with hiccups, but perhaps grind higher through the year as the year
Wow.
progresses.
Okay. All right. I noticed Gregor's here. Gregor, how are you? How are you, buddy?
Hey man, yes, I'm here. I'm fine.
All right. I know you come here because you have some things you want to share. So
Yeah, I mean,
Merry Christmas to you and your family.
same to you and everyone else. Yes.
Just while Grega's grabbing the screen, guys, just to let you know, some of the US data that was due tomorrow has been pushed forward to today. So that's durable goods.
Okay.
Just to
So
let
we
you
have
know.
something to maybe we should put the leash on the doggy and
Yeah, durable goods and new home sales have been moved to today from tomorrow. Not all the calendars reflect that, so it could surprise the market a little bit if they're not expecting it.
Always on top of, you're our cub reporter. Always on top of breaking news. Must have been that time, all those years, when you were known as a news trader.
Yeah.
Right? All right.
Yep.
So here's Grega with Dixie. He's looking, he doesn't think we topped yet.
No, I don't think so. I think that there can be maybe now just some kind of consolidation for the end of the year and beginning of next year. And then maybe when Trump will took office in, I think it's on January 20, that's when we could get a little bit more volatile moves. And that's when I would be expecting a top. So still thinking that there's room for maybe even 110 level. And the idea is also on the euro dollar, where just a second, where I'm now tracking this potential ongoing fourth wave consolidation. So still thinking that there is one more push to the downside, maybe even, who knows, 1.01 could be reached if we get some really strong push to the downside. But I think that maybe then later in January we could see potential bottom of this pair, because we will be seeing these 5 waves down in wave C that will try to complete this higher degree ABC correction, maybe around the 61.8%. So still thinking that we will see a turn next year on the euro. I don't see it going back to this levels. We know where the positioning is at the moment based on sentiment. It shows us that we are everyone is very bearish euro across the board. So I think that maybe in
where's 78.6 come in, Grega?
Around parity, just below it.
Okay, because that would have the whole world screaming about 95 and stuff,
Yeah, and now they're screaming for parity. So always they look and try to push the market even further. But I just think that based on sentiment here, that we are about to change, to see a change in this direction. We also assume that maybe Trump will want to have weaker US dollar. So not really sure what will be the catalyst for this euro to turn to the upside. Maybe the ECB will stop being dovish here and try to follow maybe what Fed will do next, and maybe this will be a catalyst for a change here. But overall, I just think that the whole Elliott wave pattern here is very clear to me, and I definitely would.
Yeah, well, this is setting up for wave 3. It's a money wave.
Yeah, or wave C
Right.
to the upside.
Or either, okay, yeah, either
Yeah,
or.
but either way, there is definitely a very big upside potential, and I think that we could see this happening next year.
Okay.
Also, regarding metals, I still think that they are in consolidation. 2,400, maybe even 300. That's the lower supports that I would pay attention on next year. So if we get into this area, that's when I would be looking for a push higher. So until then, I think that these metals could actually consolidate a bit further. Silver, in such case, if someone has been looking maybe for some kind of shorts here, at least in the near term, I think that silver is then definitely much better option. We have this third leg of decline underway here. We have a lower swing high here. So I think that we are coming back towards 27, 26 in the first maybe quarter of next year. And that
Okay, and everyone watching this now or later, I just want to say that Greg is not a perma anything, and he was very right and very long and very on time for the upside in the metals that we had a quarter ago. Okay, so it's not like now he's, bearish. So I'd pay attention. Fade him at you know what? Go ahead, fade. I challenge anyone to fade Grega for a month and tell me what their balance is. Who wants to do it? Raise your hand. No one.
I'm
Okay.
also wrong.
You want to fade? Grega's going to fade himself.
Yeah.
For about a month or two, anyway.
I mean,
okay.
Earlier you mentioned gold-silver ratio, right? So here we have actually a gold-silver ratio at the top, and we can see that always when there was a very strong reversal to the upside, when the ratio was on the rise, silver came obviously to the downside, while gold was basically trying to move sideways here. So I think that's why I said earlier that maybe metal gold will stay sideways, while still silver could potentially reach even lower prices. But in both cases, I do not see buying opportunities on these two until we see a completion of this recovery here on gold-silver ratio, somewhere maybe around 98, 97. So clearly I'm looking for, if I zoom this.
I know someone looking for 95.
Yeah, I'm looking for that area. When we will reach this area, I think that there will be a new potential reversal on the horizon, and this will be the perfect timing then maybe to look for new opportunities on metals. We also still have dollar Chinese yuan. Let me just show you this one. Still on the rise, and we know that obviously with correlation with gold was not perfect lately, but it's much easier to look for potential buying opportunities on metals when dollar Chinese yuan will start turning to the downside. And for now, we still see that the dollar has room, in my opinion, to break these 2022 highs before potentially we complete this recovery and then we see a reversal. And that would be the perfect, maybe then catalyst for those metals to continue with another push to the upside after, as I said, maybe a deeper corrections here.
So this is really a burning question I've been putting to a lot of people. Looking for a peak in the dollar up here and a low in euro coming up next year. Is the market not going to like, normally it's a weak dollar is risk on, it's a tailwind. Is it going to be a tailwind this time, Grega?
I think that stocks will continue higher.
Okay, and the weak dollar is part of it. So everything, and silver and gold bottom, so everything starts going up together again.
Yes, but I still think that if you're looking for, because at the end of the day, we are still looking at opportunities. So even if I'm saying that the dollar could potentially see a reversal to the downside, okay, it means that obviously this is bullish for stocks, but it doesn't mean I would be buying stocks here. I still want to see some deeper, healthy corrections on stock. I'm not sure what should trigger this correction, what should happen, but at the end of the day, if I'm paying price for something that I want to buy, then of course I want to see this price coming lower. And for now, that's not the case yet. I still think that even if we see a retracement, then wait for could unfold, but obviously should reach much lower prices. I don't want to buy this one here, especially because we're all of those indexes. We recently started to break to the downside out of these wedges. So maybe this will send dollar towards $100 index towards 110, maybe 111 before potentially we are going to see a completion of this pullback. It's not even necessary to see a very strong explosive move to the upside on the dollar for S&P to make like 3-4% pullback from here. I just still think that but whenever we get this retracement, I think that will be opportunities here on stock still. But if you look maybe at some of the equal weighted stock indexes here we have Nasdaq. You said earlier that we had this pretty nice rebound on Friday, right? Well, if I look at this one, I mean, it's very, very concerning for me. So that's also signals that we could either stay sideways or maybe experience some more near-term risk-off moves. But if we see this healthy fourth wave retracement, I think that that's when we should be looking for potential opportunities on the long side. Where will be the dollar at that stage? It yet to be discovered, but I think that opportunities are still likely to occur in 2025. But firstly, we need these pullbacks.
Okay, thank you. All right, great. Anything else?
Yeah, watch Bitcoin.
Okay.
I mean, Bitcoin overall, we really should understand that Bitcoin has been in a bull run for actually since 2022, right? So more than 2 years now. It's not in uptrend for the last 3-4 weeks, like everyone trying to see this like that's the start of a new bull run. No, the start of a new bull run was down here. So I think that this current phase is a real stage of a grid, which in my opinion is quite concerning for the 2025. I think that next year we could see a serious liquidations happening on this sector.
And your line in the sand is what, 73?
I think that if we start breaking 80,000, that would be the first indication that we are done here. We have already seen a lot of traders that were concerned a bit after these liquidations that occurred last week after Fed cut rates, and I think that that's just the first test of these investors, how long they are willing to hold these investments. But overall, I just think that if you look at this price action, you definitely want to get out here rather than looking for new opportunities.
Got it. All right. Important. A lot of people feeling rich. Just remember, it's not a profit till you take it. It's just paper.
Yeah,
it's on paper.
Exactly. But of course, it's very hard to predict at which price Bitcoin will stop. You can clearly see a very strong move in a very short period of time with an extended targets. So I think the important is to focus more here on cycles rather than price projections. We can, even if we will stay in uptrend for another month, 2 months, 3 months, we could start moving towards some extremely high prices here. But when it comes to cycles, I think it's very important to not to be over invested at this phase and rather just trying to take something out of the table and maybe leave something there if market suddenly positive surprise you. But overall, I just think it's a very risky to
tighten up your stops. I noticed I was on a show and I said 92, under 92. I'd start to get concerned, and we've had 2 tags at 92, but not take it out. I think that's an important area.
Yeah, as well, of course.
Okay. All righty. Should we bring our general in here?
Yeah, sure. He's waiting, I'm sure.
All right, General.
Well. Before I jump in, I was gonna do a couple of things. First of all, we got Steve and Stelios here, but we've got data coming out, as Ryan pointed out. So I'll take over the screen. But let's bring in Steve really fast. Steve, hey, did you have any comments as we're going into this Christmas week?
Hey, mate.
Hey, good morning.
Good morning. Comments. I don't think anything materially has changed since last week. We do know that liquidity is going to start going away. So that means that we need to be extra careful. We've seen in the last weird volatile moves during holidays, and many of the times these moves can even be completely retraced once liquidity comes back. So in general, my advice would be that people should lighten up, enjoy the days off, and not try to squeeze something out of the market at the very, very end of the year.
Yeah, and that's a great point. Speaking of end of the year, have any of you guys read any end of year flows that might be coming through? Maybe, I don't know, Cayman or Orion, or did they leave already?
Well, no, I'm here, but as
Okay.
I said, as I said earlier, look at the moves. I mean, in the theory, looking at over the whole year would be that there would be a few dollar sellers. But I mean, that those moves after you had an election in between, you had those central banks, you had the move after the Fed in the equity markets, and they may have thrown a lot of spanners in some works. I'm not going to bet on much in regards to those flows, and the few we read were not looking at overly big signals right now.
Okay. All right. Stelios, I'm sorry, I didn't mean to cut you off. Either did you have anything you wanted to add as we
I am
are wrapping
offended.
things up?
I am deeply offended. No, first of all, I wouldn't put too much importance on any flows we see up until New Year's. Every year it's the same thing. Secondly, the S&P that Dale started with, what did I say last week? I said there is no technical evidence that we are bearish in any way, and we did bounce really strongly on Friday. I still think the level is probably around, for me, it's probably around 56.70 on the S&P. Above that, I think the trend is still bullish. Would I chase it up here? No, but if I was long, I wouldn't be worried at all yet. I think there is a turn coming, but no sign of it just yet. Now, regarding the dollar and yields and all that, on a macro level, the euro dollar, theoretically, you should be short because the US has apparently, well, it looks like they have better data at the moment. The Eurozone is really not doing well, etc., etc. But the market has priced in a lot for Trump, and it's expecting a lot, not only for the dollar and yields, but also cryptos, everything. Trump is a savior, is going to come and make everything perfect. So we have to wait and see what he does. So until he actually takes office, I think the trends are going to continue the way we are. So the dollar, So the dollar is going to have more strength, probably short term, but then after January, whatever that is, all bets are off.
All right. When he takes office, you're talking about now.
Yes.
Ryan saw that he was just posting in the Forex Analytix chat room. Bloomberg had adjusted, the data, moved it forward, and I noticed it was on a couple other calendars too. So I think a couple people are picking up. But you're right, Ryan. I don't know if everybody's going to have know that all this data is coming out right now. I think a lot of people just are taking the time off. So let's see what data we get. I'm going to have the yields in the middle, S&P to the right, and I'm going to put the Canadian dollar on the left because we are getting Canadian GDP this morning. That was scheduled. So, and the Canadian dollar has actually had a nice little rally coming out of this wedge. You can see today, but again, lack of liquidity. So we'll see what happens. If you guys want to, Ryan, if you see the data, or K-Man, you see the data out before I do, make sure you let us know. And I want to urge everybody to read the blog post from, we're circulating it around. That's Ryan, Leandro, Grega, K-Man, Stelios, Nick, myself. We've all added to that blog. And if you want to see what we're looking at going into 2025, just read it there. It's right on our website under the blog location. So
very generous.
And hopefully, and it's always hard looking into, what's going to happen for a year from now. But but I think there's some major themes that'll take place. All right, here we go. We're about 2 seconds from data.
Canadian PPI hot-ish. The raw materials are down. Durable goods down 1.1%, so a bit of a loss there.
Oh yeah, yep.
The core measure, capital goods orders non-def XR was better, 0.7 versus 0.1 expected. So a little bit mixed on the data. Probably some big ticket items in there, defense, aircraft, that sort of thing. Probably swinging that around a bit.
Yeah, and did you see the Canadian GDP numbers come in yet? I haven't seen those.
Yeah, oh, very nice. 0.3%, beating expectations. 1.9 on the year, beating expectations.
Oh, okay. All right. Well, then there we go. Maybe the dollar CAD might actually pull back a little bit. You can see yields they haven't really moved a lot, but they are ticking down just a bit. The dollar hasn't really reflected anything. Maybe people are like, wait a second, data just came out. Yeah, it looks like that durable goods data came in month over month at negative 0.1% versus 0.3% what the market was looking at. So we might get a little bit of a delayed response here. We might actually see the dollar come under a little bit of pressure. But who we've got today, and I think Dale, do we have Mark here?
Yeah, it's strange. I can't promote him. When I click that box, it just comes up and says report.
Oh,
So,
let me see.
Let me try to do that. Hold on.
Yeah, we're gonna try to help you out here.
I promoted
someone
him.
sabotaged me.
There we go. I promoted him.
Okay. Well, can you see what that is on Zoom? That I don't have that.
I think it's because Steve came in and took over the host spot because there's only like one host spot. So yeah, okay. That's probably what had happened. But
all right,
looks like you have. Go ahead.
Morning, guys.
Hey, Mark, how are you, buddy?
Surviving.
All right, really great to have you here. Thanks a lot, team, for everything. You want to say hi to Mark, Blake?
Yeah, I'd love to say happy holidays, Mark.
Happy holidays, guys. Good luck for the new year.
Hey, yeah, Merry Christmas, Dream Team.
Merry Christmas to you,
Merry Christmas to everybody.
Merry Christmas, everyone.
I hope that Santa brings you. Well, Ryan, I hope he just brings them coal, so you can stay warm. Anyway, Merry Christmas. Hug your families and enjoy the holiday. Thank you, guys. All right, so Mark, great time to have you here. What's top of mind going into 2025? What do you think the major themes or headlines that you think are in front of us with the new administration coming in? All the changes, tariffs, etc. I know that you're a thinker, and I know you're looking ahead. What are you preparing for?
About everything, huh? Over the weekend, we learned maybe the U.S. wants to take back the Panama Canal after all.
Yeah,
and we might want to buy Greenland of all things. So, I think that really captures the great degree of uncertainty, the great degree of rhetoric. I'm born here in the U.S. I have a master's in American history. I studied American history, and yet, what a confusing period of time that lies ahead of us. Most of the time, as an American, I'd like to think that we're the good guys. That yes, that sometimes we do things wrong, but the heart's in the right place. And the rest of the world, countries like China or Russia or Iran, they're the cause of the major disruption in the world. And yet, here we sit here a month before the inauguration, the U.S. has become the great disruptor. And it doesn't please me, but here we are, dollar very strong, Federal Reserve interest rate policy diverging from the rest of the world. And this is shown in the divergence between, say, I look at the 2-year to influence short-term interest rate influence.
Are you showing, do you want to share your screen, Mark?
No, I don't have anything really to show.
Okay. All right.
I would point out just that, the 2-year interest rate differentials, to me, are the key right now. Sort of the meme in the market, monetary policy divergence. So you look at Canada, you guys were right. Canada's GDP came out a bit stronger. Canadian dollar doesn't care. And the reason the Canadian dollar doesn't care is because the US premium over Canada, 2-year premium, is the widest since 1997. That is, most of us could be indifferent whether we hold US dollars, say US T-bill or Canadian T-bill in reserves, or as our margin money. But the market says that they're paying you, the Americans are paying you over 200 basis points to be long US dollars over Canada. So which way is Canada going to go? Same thing with Europe. I look at, for the euro, I look at the 2-year US German differential. We're at basically the widest we've been for some time, which means that you're paid to be long dollars over euros. So which way is the dollar going to go? I think the euro is going to break parity early next year. Maybe you're right. You know that all this is there to buy the rumor, sell the fact on Trump. I think it's more complicated than that. I think Fed policy has a big role to play in explaining the dollar's strength. But there's a chance that we get a little bit more in the dollar. I think the euro below parity. I think sterling below 122. So that gives us another 3 cents. I think dollar yen tests 160 again. So I think that this dollar has a bit more room to go. You know, earlier this year, I thought that we might have turned, but with the election policy change, I think we got to still be bullish the dollar for a bit more.
Okay. All right. And what does that say about risk and rates and the Fed? Do you think, I mean, this hawkish cut, do you think that perhaps Powell doesn't really have anyone to answer to? He's not looking for a reappointment. I don't think that he's a fan of the incoming president. He doesn't have to. He could basically act pretty independently here, and not bow to political pressure. How is the administration going to get a lower dollar? A friend of mine said, you know, if you just pay attention to what the administration wants, they usually get it when it comes concerning the dollar. Can they? I mean, you talk the bull case here. How can the administration, can they just jawbone the dollar lower? What has to be done? Do we need like a Plaza Accord to take the wind out of the sails of the dollar? You know, you always have to look at both cases. We heard the bull case for the dollar. What would be the bear case for the dollar?
Yeah, Dale, you know, I think that, you know, I'm looking at you on the screen and I see that I have as much gray hair as you, which means a lot of scar tissue, you know, and we've been down this road before. You know, before they reached the Plaza Agreement, that was in September 1985. There was months where policymakers tried talking the dollar down. There was even intervention to try to knock the dollar down.
Right.
Of all the things that really move the dollar, I don't think that wishes are among our top of the list.
I like that.
You know,
all right. You can't just cross your fingers on this.
Yeah, no, I think that, you know, and that's also a very American point of view, that somehow the Plaza Agreement was good. We think it was a high point of central bank coordination, driving the dollar down from ridiculously extreme levels in the early 80s, thanks to the policy mix the U.S. had. Reagan was expanding fiscal policy, social spending, yes, tax cuts, yes, defense spending, yes, while Volcker was having his foot on the brake at the Federal Reserve. That policy mix is the most bullish for a currency. That is what drives the markets. It's not that Trump may want a weaker dollar. The Plaza Agreement in Japan is seen to be a capitulation. The source of their problems, this end of the Japanese bubble, the demise of the Japanese economy, begins with the Plaza. China sees it the same way. They see the U.S. Pressure Japan, devaluing the Japanese yen, leading to this lost decades. China doesn't want to go down that path. Moreover, the Chinese currency is not nearly as undervalued as the yen or the euro. You know, I'm not smart enough to come up with my own models. I use the OECD's purchasing power parity, and it's only useful in the extreme. Day to day, it doesn't really mean much, but we're at an extreme. According to their measure, the euro and the yen are more than 50% undervalued. Wow. The RMB is not nearly as undervalued. Yes, they have a big trade surplus, but you can't go from a trade surplus to the valuation of a currency. It's much more difficult. For example, Eurozone has a large current account surplus. They have a weak currency. Japan runs a trade deficit, which is perhaps unknown to the incoming US administration. Japan runs a trade deficit, merchandise trade deficit. It imports more than it exports despite the weakness of the yen. They have a current account surplus, a broader measure, which includes capital flows, like profits, like interest that they earn on US treasuries. When they repatriate that counts as part of their current account surplus. So I think the world is much more complicated than this simple trade surplus currency taking advantage of poor old United States. So I suspect that. I'm sorry.
No, that's okay. Go ahead, Mark. You finish your thought.
I just suspect that this is going to be tested. You can't say a bunch of things and gain credibility in the market. You can't talk about taking the Panama Canal because they charge too much, or buying Greenland when it's owned by Danes, a NATO member, which means it's in safe hands. And so this is just America sort of on the world stage, but the dollar is rewarded because not of what happens in Washington, D.C., or not from the White House, but because of what's happening the Federal Reserve compared to other central banks.
Okay, how does tariffs complicate the trading aspect in FX? What are your expectations? Everyone's saying, no, it's just being used as leverage. I don't think so. I mean, I believe that he talked about 100% tariffs on any of the countries that want to participate in the BRIC currency.
Yeah, well, I don't think we have to worry about that. I don't think there's really a BRIC currency. And this is what Trump does. He makes these claims, and then he showed, for example, among the first things he did after being reelected, he says he's going to put a tariff on Mexico and Canada. And he says the Mexican president, I think, shows the way forward. What would we tell our children? What would we tell our colleagues if they face a bully? We'd say, push back. The bully is hollow. They're like those puffer fish that blow themselves up to look big, intimidate you, but all you have to do is stand up, stand your ground. And that's exactly what the Mexican president did. She writes a letter to Trump and says, listen, your fentanyl imports are down a lot. Immigration from the southern border is down a lot, despite what you might have said or might have thought during the campaign. Right. And she says the guns that they're confiscating from criminals in Mexico come mostly from the United States. Yeah. She pushes back. Trump says, victory. She's going to defend the border. Trudeau, to your point, goes down to Florida, and he's mocked. He's talking about being a governor of the 51st state. You stand up to bullies, they back down. Greenland and Denmark are going to say, no, we're not for sale. Panama was very clear. The Panama Canal is Panama's. It's not controlled or influenced by other countries, Europe, China, whomever. And I think this is what's going to happen. Other countries are going to push back against Trump. And this American nationalism breeds foreign nationalism. Yes. So I think this is where the sort of rubber hits the road. But again, this is all like politics. And when you think about the tariffs, why weren't the tariffs so inflationary in the first Trump term? Because they targeted the tariffs to two things: intermediate goods. Those are goods that are like semi-finished, intermediate goods that go into finished products. That's not necessarily passed on to the consumer in CPI. Secondly, you tariff consumer goods where there's easy to find replacements. And that doesn't always work for all consumer goods we buy from China, but you look at what we buy from China, and it's really pretty much electronics and toys from China, but electronics, and that includes all those things with batteries. So I'm not really concerned that the tariffs are going to be inflationary. I think that the economy slowing down is going to absorb some of that pressure, and I think that the tariffs will be a brake on the economy more than inflationary.
Okay, and your view on risk in 2025?
Yeah, risk.
Did the character of the market change on this bear raid last week?
I'm not sure that's changed. I mean, I think that added volatility, and I think this is what I think risk is in the capital markets is volatility. Volatility tells us sort of what's mathematically possible. So if you have the higher the volatility, whether it's the VIX, the MOVE, or individual currency pairs or equity pairs, the more that's possible. which means that margin, the cost of holding the position, becomes greater. And so, yes, I do think that we're in for some volatility, but as long as this, volatility is not agnostic towards direction. When volatility falls, tends to be when the stock market rises. And so low volatility means continued bull market. So I think there might be some juice left in the stock market. I've lightened up, but I haven't gone short anything. I think there might be some more upside, but the market's rich to me. I'm still looking at ways to diversify. Despite the underperformance in Japan and Europe over the years, I think that the dollar is going to give us a tailwind for those markets, perhaps later in 2025.
Okay, interesting. I wanted to ask you if you had a view on real estate.
Tell you the truth, Dale, I just sold my New York apartment.
That's why I wanted to ask you. I forgot. Normally I would have been right on it, and I thought about it a day or so after our interview. I go, I wonder why Mark sold his apartment in New York.
It just made sense to me. I do like that. I mean, I sort of like what Mark Twain said. You got to buy real estate because they stopped making it. But I'm a bit more selective. I think I'm looking for other opportunities, and not necessarily residential, maybe commercial real estate in different parts. But yeah, I mean, I think when we think about owning a house, I think the best way I could think of it is to think of it as do you want to fix or float your rent? When you buy a place, you're really fixing your rent. That's your mortgage. You're fixing it. You're fixing your cost of shelter. And if you just decide to rent, you're letting it float. And there's all these formulas and all these models that help you make that choice. It depends on your tax bracket and that sort of thing. But the idea that you can buy real estate and get rich, maybe. But I think this is one of the problems of this generational divide in the United States, but also in other countries, where young people cannot afford to buy houses. And that affects household formation, which affects the broader economy. And so it does concern me that house prices, not just in the US, but in many high-income countries, is beyond the means of most people.
Yeah. Okay. Well, I know a few people think that's changing. They're pretty good. Check out Melody Wright's work on housing. Anyway, so that's why I thought maybe you thought that it was overvalued. It was time to ring the register. You wanted to get out of New York for a while.
Yeah, I'm afraid that I married up. My wife grew up in a house. I grew up in an apartment, and we compromised and bought a summer house not far from Bruce Springsteen in Asbury Park.
Oh, cool.
A smaller place than his, of course. And during COVID, it just seemed to be the right thing to do. Move down to the shore, more sunlight, more space. And neither my wife nor I have killed each other yet, so all's good.
Well, Mark, it sounds like we're gonna, Trump. Do you remember trading during Trump 1.0? Did you like, the trading environment? That I mean, he did create some more volatilities. There were cartoons of him, making a phone call about a tariff and having all kinds of monitors in front of him.
I think that we should recall just the lesson I learned in Trump 1.0 was to take demand seriously, but not literally. People like us, Dale, like your team at FX Analytics, we write a lot. We use words. We got to be precise with words. Look at what we do with Fibonacci retracements, 0.1%.
Yeah.
We're measuring these things, and on currencies, you think about the euro. Right? We're not just talking about tenths or even hundredths of a penny, but the real spread is 1,000th of a penny. We take things in the markets very precisely, and almost like we're making some kind of German or Swiss machine tool. But it seems to me that the new administration doesn't take language quite as seriously. They use it more loosely. We've got to take them seriously. They've got a lot of power and influence, but I don't think we ought to take them literally. And that means whether it's the tariffs, whether it's Greenland, whether it's Canada becoming a 51st state, this is just like noise. Try to keep an eye on the signal, which makes it harder. But that's my best advice: is keep an eye on the signal and try to ignore the noise.
All right. Speaking about ignoring the noise, have you seen any drones out there?
I haven't seen any drones. It says more about my eyesight though than the skies.
Okay, I wanted to know because I want you to be here for your next interview. I don't want any alien abductions to pull you out of here so we can't talk currency. So, okay, yen, could we have sometime this year? I mean, I think you said 160. That's the old highs. Could we have a yen carry trade problem 2.0 if we get another wave like this in 25 from wherever it starts? Some people think it's going to start, around here, and that we could have something like this again, that there could be a big break, which, they're so tightly correlated with yields. Where are you at on yields? This has surprised a lot of people. Are we going to 5% or are yields peaking in your view?
Yeah, it's a good question. I'm a bit surprised that we even got above those November highs. So I know there's some people talking about 5%. I don't quite see it because I think what happens, and I think we began seeing this a little bit at the end of last week, where at some point the rising yields hurt the stock market.
Yeah.
And then when the stock market sells off sharply, the bonds get a better bid. So I don't have a strong feel for how this relationship pans out over the course of the coming year. But I do think that we probably have to look for slightly higher yields first. What I'm looking at is the next jobs report. And the next jobs report looks like it's going to be around, the early estimates, around 150,000. So I think that's what we need to see is a slower labor market. And that'll take pressure. That'll get the Fed. I think that, speaking about Powell and this pivot, first he tells us we're not so worried about inflation. We could be more worried about unemployment. Now he tells us, oh, inflation's back on the radar screen. We're going to be less dovish than we thought we were in September. And I think the Federal Reserve is going to swing back towards the labor market. And I think that my bet, just like when the Fed cut in September, many people, including myself, thought that interest rates might have bottomed with the Fed's 50 basis point cut. And now with the 25 basis point cut, I think that maybe interest rates came close to a peak. We might have to press that a little bit, but I think I think that we're closer to a peak in interest rates than we are to 5%.
Okay, because TLT has to get back above 94 in my view. Otherwise, it's starting to look like it could open the door. I mean, 100 to under 90 already, 10 handles, and this kind of looks like a breakdown under 90, measures 80. The third drive would come in all the way down here, Mark, at 72.42. That's quite a bit higher in yields on the long end than we had in October. Could we have, it kind of reminds me, especially if the market does what some of the bulls are saying, and we're going to go to 6,400 before we have a big correction. Some people are in the other camp. But if rates keep going up and the market makes a new high, and I could see how people might be talking 6,400 if we clear 61, we'll have like an 87 setup with with disintermediation of rates keep going up, the market keeps going up until the rubber band snaps.
Yeah, that's a scary scenario because I think that before we get there, we'll see all kinds, like we saw financial stress. We see what happens with the banks, and remember we've got still a big concentration of commercial real estate loans maturing. I think that the U.S. economy can do well in a low interest rate environment, but as we move into a medium to higher interest rate environment, we're going to see all kinds of signs of strain, and that itself will constrain the rising yields.
Okay. All right. So the only thing that's really going to save the bond market is economic weakness.
Economic news, and that economic news is a weaker economy and financial fragility still.
Okay. Well, I think we have that, or we wouldn't have been down 180 handles on Thursday in the S&Ps. It says a little bit about structure. I mean, you and I have been charting long enough, Mark, to know that when a market does something like this, I mean, I was talking about December being a great month for a bear raid, and that was definitely a nice little bear raid. This candle right here, broke a wedge and everything. It's like the character of the market is definitely shifted from these kind of candles to extremely wide ranges. The ATR is like tripled. So I think we'll need seatbelts this year.
Yeah, I think that, I mean, there's this ancient Greek who says that if you give him a long enough stick and someplace to put his feet, he can move the world. And that's our position, sort of masters of the universe, huh? But the problem is that there's nothing solid to put our feet on anymore. You can't count on the U.S. Whatever course we were on from the end of World War II through 2016, we're off that course now. And the re-election of Trump sort of reinforces a new path. Same thing with China. China was on a path from roughly 1980 to Xi, and Xi's taken China off the path that it was on. Europe is still mired in this almost a 19th century dilemma: what to do with Germany. Kissinger once said, "You got to pity Germany. Too big for Europe, too small for the world." And a lot of the EMU, monetary union, all this is meant for the Lilliputians to tie down Gulliver, Germany. And that seems to be, now they've anchored themselves to sort of the sick man again in Europe. Public investment is horrible. You know the story, relying on French nuclear energy because the Germans have turned off their nuclear power. Japan has the first minority government in its history. And the world looks to be a mess. And so maybe it's like what Keynes said, that the markets were like a beauty contest. And that the idea is to pick not who you think is the most beautiful, but to pick who everybody else is going to think is the most beautiful. And now we have an ugly contest, and it just happens that the U.S. is somewhat less ugly than other parts of the world.
Great metaphor. And let's wrap it on it pays not to be the homeliest country on the planet. So,
Mark, we're the homeliest guy to dance, Dale.
Yeah. Well, I wouldn't know what that was like. I do empathize with them, though. So, Mark, I tell you, with all the years that we've been able to talk and share, I always look forward to our conversations and want to wish you and your family great holiday season, Happy New Year, and great health next year and your best year ever in any arena that you want, more flow to come to.
Thanks, Dale. It's very, very kind of you to say. And there's one thing that maybe I could just add. And, when we play a lot of game theory, just to game out situations, and it seems that the winning strategy over the long run is not just tit for tat. It's not just do unto others as they do unto you, but showing some mercy. And I think in this holiday season, it's just good to keep that in mind. Be merciful. Good luck to everybody.
Yeah. Amen, Mark. Thank you, Mark. Chandler, everybody. What a way to start and end at least this part of the week. Believe we'll be here on Thursday, everyone. Enjoy your Christmas. This is a perfect time where you don't have to even think about counting pips, and don't even to count your blessings because they're right in front of you. And I'll see everyone Thursday. I'll see everyone Thursday. Yeah, thank you, guys. All right, yeah, Mark's got a heart. Okay. All right, happy Hanukkah. Thank you very much. All right, everyone. All right. Adios, everyone. I'll see you. Hope you liked Blue Christmas. Did you like it, Saloon? Barry? Blue Christmas. I better get off or I'm going to start crying. All right. I'll see you.